Altria stock has dipped below $40 on the back of a very disappointing earnings report. Altria Group hit a new 52-week low and, in fact, hasn't seen prices this low since 2020. Welcome to the Fiscal Philosophy YouTube channel. I consider myself to be a value-oriented investor, and I happen to own shares in Altria Group Stock, which we are discussing in today's video. Altria Group started off the earnings release with some fairly boilerplate stuff, which I guess you could call the good news, right? So, adjusted earnings per share was up 3.3% in the first 9 months of 2023 compared to the first 9 months of 2022. And they also, of course, wanted to highlight the cash return to shareholders because, frankly, this is what people get into Altria for in the first place, is mostly the dividend. So they did $5 billion worth of dividends and about $700 million worth of share repurchases. And, honestly, while they're at these cheap prices, I do like the share repurchases. They went on to discuss what they're doing so far year to date with their Enjoy acquisition. So, the main goal in these early stages after the acquisition was just to ramp up distribution. Okay. So far, they've gotten it out to 42,000 stores and in all of the top 25 convenience store chains by e-vapor volume. Of course, they're putting up new displays, etc., to get more visibility on the product. It'll probably be a while before we get any news about the sell-through on it. They also plan to continue expanding the supply chain and getting it into 70,000 stores by year end, which was the goal they had said back earlier this year. And of course, they're trying to test out promotional plans and marketing, etc. And they expect to have 70% of all e-vape volume in the United States. That's a pretty substantial amount, to be honest. I'm actually surprised by how high they're expecting that to be. One of the thorns in the side of Altria this quarter, and one of the main negatives they brought up, was the flooding of the market of a lot of unregulated nicotine products, especially in the e-vapor space. They attributed a larger than normal decline in their core combustible tobacco business to these products. And it doesn't surprise me that they might view this as a bit of a threat to their Enjoy business, which they view as one of their big avenues for growth. They've taken some action on this with litigation and by lobbying regulators to actually enforce the rules on the books. These products ignore all regulation and safety standards and are frankly illegal. Altria's management pointed out on the call that regulation without enforcement is effectively the same as no regulation whatsoever. Now, this is a correctable issue, and Altria is taking some actions on their own with their massive resources pursuing litigation against some of these illicit competitors. And they're also, of course, lobbying officials and regulators to actually enforce the rules that they've put into place. And I think, over time, they can hopefully squeeze a lot of these little upstarts out of the market. While that covers the present, I think it's also important to look forward into the future. And analysts basically anticipate Altria growing in the low to mid to single digits for their EPS. And I think that that's probably pretty reasonable to assume. This is not going to be a fast growing business. It's possible that, of course, Enjoy and some of their other segments could do better than expected, but I don't think you're going to see, for example, Altria doubling or tripling these numbers or anything. It might be analysts expect 4.5% and they get 5.5% instead, something along those lines, or it could even be a little bit worse than expected, as it was this quarter. Analyst projections about the price are guessing a high of up to $56 in the next 12 months with a low of $39.20. We're pretty darn close to that low range right now. I would never buy or sell simply on the numbers put out there by analysts for a price forecast, but the way I would look at this is if you're running like a valuation model and you came up with, say, $200, but the high analyst is 56, or you came up with like $3 and the low analyst is 39, well, that might be an indication that you need to double check your numbers. That's about the only real use I have for these estimates. Now let's discuss the dividend. By the way, if you've made it this far into the video, I'd really appreciate it if you would give it a like and subscribe. It really helps the channel. Now, the recent pullback in price has caused the dividend yield to skyrocket to the point where it's teetering on the edge of 10%. With a payout ratio that looks aggressive at close to 80%, this may seem a little bit risky, but this is a slow growing business that's fairly stable and has a lot of pricing power. So they view it as the best use of their capital to just return cash to shareholders in the form of dividends and buybacks. The dividend growth rate of 4% isn't stellar, but it does beat long-term inflation. Altria brings a solid track record of dividend increases to the table. While the dividend increases are not huge increases, they consistently, like clockwork, have been doing this for decades. They are one of the few and elite stocks known as dividend kings because of their lengthy track record of never missing a dividend raise. So, big question that I'm sure is on everyone's mind at this point. How do you value Altria Group? So, I've been buying, well, pretty much since the stock was around $50 a share. Granted, things, may change at some point, but that's where I thought that it made the most sense, was below 50. Now, I'm taking for granted that this year's EPS will come to fruition, and using that just as a rough starting point, applying a 12.5% discount rate. Now, the balance sheet is something else, right? So it's got a good amount of goodwill on there from brands that they've acquired. I mean, heck, Juul used to be on there, right? And that was a big $18 billion blunder. But I personally am hesitant to penalize them for the balance sheet unless I think that it's a situation where debt is going to start to impede their ability to continue growing their earnings and cash flow at the 3 or 4% or whatever that they're going to grow it. So we're assuming 4 to 4.5% average growth here for the foreseeable future. Now, granted, some of the nearer term analyst estimates are expecting some years to be in excess of 5, almost 6% in some cases. But again, I think Altria is just going to probably putter around in the 4s for the most part. And that seems to be reflected in their most recent dividend raise. And I think it's about what they can do. Now, the current price, of course, is $39 per share. Looks quite cheap based on my assumptions. But, if you do want to be super conservative, gut them for the balance sheet, that takes you much closer, slightly below today's price, right? But at the same time, if you're going to do that, do you need to assume a 12.5% discount rate? I mean, what if you went with an 11%? You're still at $43, right? So it really just depends on what numbers you choose to put in for your inputs and where you see the value of the business. I'm personally not valuing them for the balance sheet. I'm valuing them for the stream of cash because, again, they use 80% of their cash flow or adjusted EPS to pay dividends. and then use a portion of the rest in buybacks. So they're returning most of it to us directly. So unless I see their again, their balance sheet somehow impeding their ability to continue to do that, the primary source of value for this is in the stream of cash flow. So I'm comfortable just assuming this and, giving them a slightly steeper discount rate because, they blunder here and there, and, I need to be able to make sure that I can get a juice that's worth the squeeze. Now, here's the thing. If you are assuming a 10% discount rate, which is, kind of a pretty standard amount, they're worth, potentially low 60s based on the stream of cash flow that they could produce for you over the next couple decades. But, for me, I like a slightly more conservative number, and I think they are quite cheap today. And I think if we enter an environment where, maybe interest rates get low again at some point in the future, that, people will probably want back into this, and we'll see people, buy back in. For right now, yeah, it's probably going to be tough, right? Interest rates are high. People are talking about recessions, and, there's macro issues at play, we'll just say. But yeah, that's really where I'm at for the value of Altria stock. I really think it's probably about a $50 stock. And, granted, I don't really see that value growing by all that much. I just think, they'll just keep returning most of the cash to you directly. And the price will probably fluctuate based on macro factors like interest rates and that kind of thing. So let me know what you think in the comments below, if you agree with my valuation or if you have some other number. And I look forward to hearing from you. Thank you for making it to the end of the video. If you enjoyed what you watched and want to see more, make sure you're subscribing to the channel. 75% of my viewers are not subscribed. Please also leave a comment below, or better yet, join us on Discord. Link is in the description. And catch me every Saturday night on the Cashflow Kings live channel, 8 p.m. every Saturday night, Eastern Time. Link in the description there too. Thank you all, and have a wonderful weekend.